The S&P 500, one of the major US stock markets, after such a bad 2022, got off to a really good start over January. Now, can that continue, or was it just a false rally and building up all our hopes? And I suppose the only other elephant in the room is the Fed, the FOMC, and interest rates decision out tomorrow. Likely to go up 0.25% to about 4.5%. So watch out there. Any anomalies around that could put the kibosh on this, small recovery that we've seen so far in the S&P, and their statement as well. Very important to get the rhetoric behind the comments there to see where things are going in the future. Could be make or break for the S&P 500 this week. But if it's good news, where could the S&P push onto? Well, I'm going to have a look at the charts and fundamentals, some sentiment, to try and paint a better picture for you to see where the numbers are heading. So with that, let's get into the analysis. First of all, let's have a look how the S&P 500 has been performing so far in 2023 against its peers from around the world. And that black line you see in the middle, that's the S&P 500. You can see the different markets I've added down the right hand axis there. You can see the S&P 500 up 4.36% so far. Only a few others are ahead of it. We've got one from China, one from Japan, that's Nikkei 225, Shanghai Composite, and we've also got the Australian stock market just about its equal at the moment, then way out there at the moment, the Nasdaq 100. So performing pretty well for January, which is normally a good sign for the market. But in 2023 there's a lot more variables at play around global economics and other concerns. So let's get into the detail then of the S&P, and now we have our longer term view on the weekly Heikin Ashi chart. I'm using the ticker ES1. That's the front month E-mini futures contract. A lot of volume in there, so a really good one to use for this analysis. Other people trade maybe the SPY, SPX, all very similar, maybe slightly different numbers, but the shape of these charts are all going to be the same. So let's have a look what's been going on. And really, we had this great run up from the start of the COVID kick in, really. I think that's probably up over 100% in that period. Yeah, in fact, 120% nearly. So pretty decent return. Then we had this pullback from sort of early part of 22. Stressful year last year. And now we're forming this triangle pattern you can see that I've laid out with the purple lines there. Now this looks like make or break to me, so Wednesday's news could see us breaking on down, and then we've got 3,800, 3,500 in the next downside. But some good news, encouraging news, and then we've got to get through that sort of high zone, which is 4,250 area, and then back up towards those highs at 4,800. And if it can, for whatever reason, get through that, then the next longer term upside is nearly 5,900. And wouldn't that be amazing if it got there? So let's dig into a bit more of the detail, and these are some of the sentiment gauges that I use to ascertain where I think it's heading next. And first up, we got seasonality, and this time of the year it's always pretty strong. It has been for a while. We've got a few more months left into spring, really, before it then starts to peter off. Really the big part of the play is the November to end of year for the S&P 500, the Santa rally, for many reasons we don't need to share in this video. But at the moment it's looking reasonably bullish. Now that commitment of traders, large speculators. Now you'd expect this green line to be following the price pattern, and in the longer term we can see this sort of down trend, and it's trading still below its 50 moving average there. So I'll be waiting for it to break up on through that to give me more positive bullish confirmation. So still a bit bearish there. And then down the bottom, fixed volatility, inverse relationship to the S&P at the top. So if volatility is going up I'm looking for the price to come down, vice versa. At the moment, in the longer term, we have the volatility coming down, which is a good sign for our S&P, and we can see that reflected in the price going up at the moment. So if that changes green, then we'd expect the S&P to come down. At the moment, it's reasonably bullish there at the moment. Now, if we head into other factors, I've got these three CAGI charts. See, we've got the S&P for reference there, but on the right hand side, S&P 500 stocks above the 200-day moving average. Once it goes to black there from red, and that trends above the Bollinger Bands, it's looking pretty bullish there for me. And then I've got the same with the 50-day moving average. These are just guides to help me ascertain whether things are looking better or not. And then we've got the 52-week highs on the New York Stock Exchange. Unfortunately, that's turning a bit more bearish. It's been reasonably flattish for a while, but has just turned more bearish. So a few mixed signals there, you know, encouraging with the 50-200 moving average, but the highs, 52-week highs, starting to fall down again, so maybe a warning to us. And then if you are into reversals in price action, want to get in at certain points, then the line break chart is fabulous. Got a 4-line break chart here, so that's the one I use. And at the moment, with the setup we've got here, it is a bullish reversal we are looking for. And we got some numbers 40-40 and 40-50, so tight range there for a look into, you know, rejoining the bullish up run. And then if we focus in on the shorter term price action, see where it could be heading next. We've got the VIX on the left in Renko form, and remember what I said about the change of the colors here. If it's green, it's bearish, and if it's red, it's bullish. Now currently we are in a short-term bearish setup, and as you can see over on the right, that's reflected with that fall in the price down back towards, you know, those highs that we recently saw back in, you know, sort of mid-January. If it keeps on pulling back, then we've got targets around, call it 3970, 3930, and then this double bottom, which doubled up actually, around 3900 as potential pullback areas. But in terms of upsides, again, it's got to get through to that highs around 4090, and then 4170, followed by early 4200. So that's in the shorter terms. Let's have a quick look at the longer term. Slightly different setup here, various strategies at play, but we're just going to analyze what's going on at the moment. And in terms of indicators, that's bullish. Our modified DMI also bullish, and you can see how those flicks, those changes married up to the current bull run there. It's broken above our offset Bollinger Bands and currently in that bullish run, just pulling back slightly into the, they call it the cloud, Bollinger Cloud. It liked to bounce off in the past, so if we can keep this bullish momentum, then hopefully we'll get a reversal. I've used a 30 block size for this one. It was 10 on the shorter term, by the way. For 150 possible upsize, then for 325 sort of area, and then, you know, much longer term for 650. And downsides in the long term, well, you've got to think about this Bollinger Band cloud. You're probably talking down the bottom here, 3950 sort of area, breaks down through there, 3850, 3835, and then down to 3700, 3750. So that's the technical analysis. Let's give the S&P a score. So it's score time, and I'm going for weak bullish for the S&P 500 based off what we've seen in this video. Now in the top right, those variable factors, mostly bullish, only one of slight concern there, the commitment of traders, still bearish. We saw that the New York Stock Exchange 52-week highs was also bearish. probably less of a weight in the thinking process there than the others, which were all pretty bullish. Then we head to the short term. I've gone for neutral in the short term due to that recent pullback as we wait Wednesday's FOMC interest rate decision. Signals currently bearish in the short term, trend weak bullish because of that pullback, but in the medium term it's looking a lot better. Trend signals, overall view all bullish, and we have some targets for you to the upside, 1.5 and 2.5 to 1, and to the downside 1.42, 2.25 to 1. So pretty symmetrical up downside returns there, but overall I'm going to go for a slight bias to the upside, and I am weak bullish. So encouraging signs for the S&P 500, but it's in a fragile environment, so that sentiment can change very quickly. But what we've seen from the charts and that data that we've put forward, all looking pretty decent at the moment. Now let me know in the comments below your thoughts. Where do you think the S&P and for that matter other stock markets are heading this year? Is this just a false rally, building up our hopes, and it's just going to return back to the doldrums, or are we in for a better 23? Let me know in those comments. Now, if you want to learn more about the technical analysis I've used in this video, it's a great playlist on my channel, and if you work your way from top to bottom, you're going to take your trading to the next level, and that playlist is coming up now.